The JMF Advisors Show is a podcast for business owners, C-suite executives, and entrepreneurs who are looking to build, grow, or even exit a business.
We bring in some of our best financial advisors to interview experts on business best practices, hot topics, and sprinkle in some tax and accounting help.
If you're a business owner, startup founder, CFO, or just starting your side hustle, this podcast is for you.
Hello, and welcome to the JMF Advisors Podcast. We have another great topic today. My name is Rachel Taylor. I'm here with Orman Wilson, and we are going to cover a variety of timber topics. We have a lot of clients who own timber in a variety of ways, so we get a lot of questions. So we're going to go through some of the most frequently asked questions, back to the basics kind of thing.
Yes, and I've spoken to the Alabama Forest Owners Association. I've also spoken to the Alabama Forestry Association, and it amazes me the number of clients who have no idea what their basis is in timberland, and that's one of the most important things you could know. That is basically the starting point for managing your timber, scheduling sales, cuts, thinnings. And as Rachel mentioned earlier, back to the basics is basically getting back to the basis of what your timberland is worth.
Let's talk about why basis is important. Why do landowners need to know what their timber basis is?
Okay, whenever a landowner decides to cut timber, the basis helps reduce the taxable income from the cut, and that's why it's important to know you can acquire timberland one of three ways. You either buy it, or you can inherit it, or if you're fortunate, someone can gift it to you. And so your basis depends on which of those three methods that you had to acquire the timberland.
So let's take those three. Let's start with the purchased timberland. That's probably the easiest one for people to understand. So if you purchase timberland, what's your basis?
Okay, that is the easiest. You would actually take the purchase price for the timberland, then any improvements that you make to the land, whether it be an outbuilding, it could be a barn, you could construct a lake, or even have some kind of utility shed. Any road improvements would increase your basis in that timberland.
So that makes sense. So people, what I paid for it, that's my basis.
Right.
That makes sense. Okay, so what if somebody gives you the timberland?
Okay, there is a caveat in this, but let's suppose I give you some timberland. Your basis is going to be whatever my basis was in the timberland. And there is a caveat to that, because the IRS does not want me giving you something and you having my basis, the market falling out, and then you turning around selling it and having a huge loss. Mm-hmm. So in that case, your basis would be whatever the fair market value was on the date I gifted it to you.
Okay, well, that's good to know. So what about inherited timberland? We see a lot of people who inherit timberland.
Yes. When you inherit timberland, it's very important that you need to get a forester, an appraiser, even get an attorney and a CPA involved. But you need someone who can tell you what is the fair market value of this land and timber on the date of death when you inherited it. A lot of people don't think about it. Years down the road, they will come to me or their CPA and say, I want to have a timber sale. Will I owe tax? Well, what's your basis?
Right.
They don't know.
Yeah.
We can actually reverse grow the timber to get an idea of what the timber and land was worth 20 years ago. It's a lot easier. Go ahead and get the fair market value, get it appraised at the date of death or as soon as possible afterwards. It's going to cost you a little money to do it then, it's probably less cost to do it then than to hire someone to reverse grow it.
That makes sense. That makes sense. So let's say you get your timber, because you mentioned the growing.
Yes.
So how does that affect your basis, the growth in it?
Okay. What we can do, we have a timber template, and your timber basically is divided into 4 groups. You have pine, saw timber, pine, hardwood. You also have hardwood pulpwood and hardwood saw timber. Your appraiser will tell you you've got so many tons of hardwood pulpwood and it's worth just $25,000.
Mm-hmm.
Okay. We can take that information, put it in our timber template, and then each year we grow the timber. And without getting too confusing, the pulpwood grows, and when it does, it turns into saw timber. And so it reduces the amount of pulpwood you have, but it increases the amount of saw timber you have. We take a portion of the pulpwood basis, convert it to the saw timber basis, and we keep up with it that way.
And your basis never changes.
Right.
It just has to do with volume at that point.
Your basis, the total basis never changes. The only time your basis changes is when you have a thinning or a cutting.
Right.
That reduces the basis for the timber sold.
And so the timber template helps us accurately determine the portion of basis you might be able to take for a particular cut.
Yes, that is
or
correct.
Thinning. So that's why it's important to keep up with it annually.
Right.
To make sure you're maintaining it correctly. So you mentioned timber appraisals. So people get appraisals for their timber, but they're also their land. You mentioned buildings and that kind of thing. So if you do get an appraisal, or maybe you've got a total value from a gift, how would you allocate that to the different parts of what you own, the land, the timber, all that?
You would take the total amount of your basis, and you would look at what is my timber value, what is the value of my building, any other depreciable assets, and then you would allocate it on a pro rata basis.
And then that way, if a lot of people will hold the land for a long time.
Right.
They sell the timber, but that way they know this portion of my basis is still in that land. I've still got that.
Right.
Still in this barn, still in this lake. And that way they can keep up with it. What else about allocating basis? Anything else?
Well, the one thing to remember, you definitely want to allocate as much as possible to timber,
Right.
because land does not depreciate. Most of the time, people are not going to sell the land anyway. So the more you allocate to timber, the less your tax liability will be when you actually have a cut.
That makes sense. And I think the foresters probably recognize that, or whoever's doing the appraisal.
Yes.
A lot of them will recognize that too. So while we're talking about foresters and professionals, let's talk about timber farming. Now, when people hear timber farming, sometimes they don't necessarily know what that means. So what does that mean?
Right. A lot of people think I can't be in timber farming business because they get confused and they think about row crops. Someone who's actually in the row crop farming business where you plant and harvest every year.
Every year, yeah.
And they're like, I don't have enough land to where I can cut and replant every year, but that's okay.
Mm-hmm.
The IRS actually understands if you're in the timber business, you plant, it could be 15 to 17 years before you even have a thinning. Then it takes another 10, 15 years till you have a clear cut.
Right.
Then you reforest and start all over again. So they understand you're not going to report timber sales on your personal return every year.
Every year. This is a long-term
Yes.
process here. So what do people need to be doing on an annual basis if they do want to consider themselves a timber farmer?
Okay. Basically, you have 4 types of timberland owners. You have the business person, You have someone who is strictly investing in timber. You also have hobby and personal, but we won't even discuss those two categories. To be in the timber business, you need to have a management plan.
Mm-hmm.
You could probably write it yourself,
Right.
but I would have someone who knows more about the timber business, say a forester.
Sure.
I mean, your CPA could actually help with whatever, but a management plan actually lets the IRS, should you ever be audited,
Sure.
God forbid,
Right. Hopefully not.
but if you're ever audited, you can meet with IRS, show them your management plan, and they can go through it and they'll be like, oh, okay, they definitely have a profit motive. They're in this for the long run.
Mm-hmm.
And so, yes, they do qualify as being a timber business.
And so if you were in the other category of a timber investor, that kind of stuff wouldn't be important. But
yes, but if you're a timber investor, it's kind of like having an investor manage your stocks and bonds.
mm-hmm.
They buy them, sell them, send you dividends. You're just getting a check.
Right.
Okay. If you're in the timber business, the buck stops with you. You're the one who's running the business. And so, and another benefit is if you're an investor, it's capital gains on any sale of timber. And you also have to pay the additional 3.8% net investment income tax. That's on investment income.
Yeah.
If you're a business in the timber business, you can make a 631B election so that the proceeds are sold under that code section. The beauty of it is it's treated as ordinary income, reported on Form 4797. If it's ordinary income, it's not subject to the 3.8 net investment income tax.
That's good.
And it even gets better because when it comes tax time, it actually transfers to Schedule D for tax purposes. And so, once again, you're getting capital gains rates without having to pay the extra 3.8%.
And so you'd get the capital gains rate as an investor, but you'd have to pay the 3.8%.
Right.
So
Correct.
if you can check the boxes to make yourself a business,
yes,
then you're going to save yourself that 3.8%.
Right. If you're in the timber business, you could be looking at paying 15% tax.
Mm-hmm.
If you're just an investor, you could be looking at paying 18.8% tax.
And that can be a big difference.
Yes.
Because sometimes these are big dollars. So forest management plan, having a forester, doing those things that need to be done for the maintenance of the land. So sometimes people have to do control burns, they have to do thinnings,
Right.
they have to do other things to keep the land in good shape.
Yes, and in this area of the country, we have beaver control. Which is
that's
a problem.
Right. It's a big one.
Yes, and you'll do fire lanes.
Mm-hmm.
That's deductible. When you actually have a clear cut, that's when reforestation kicks in.
Oh yeah,
and the cost can be substantial, but the law passed recently. I say recently, been 10 years.
It's all relative.
Yes, you can actually deduct up to $10,000 now in reforestation cost. Anything over, and that's per site, per separately identifiable property. And anything over that amount, you go to the old rules where you just amortize it over 84 months.
So while we're talking about what all counts as reforestation, while we're talking about that.
Okay. Of course, immediately you think of either the seeds or the seedlings that someone actually puts out, the labor that you have to hire to go out and pay it, any site prep. It could be a bulldozer. You could, if it's your bulldozer, you could actually whatever the depreciable cost of the bulldozer is, that adds to it.
Yeah.
Site prep in general, plus any of the seedlings.
So if you are a timber land owner, you would need to keep track of those expenses, and so that you can be hopefully fully deductible on your federal tax return, assuming it was under the limits. But Alabama
Yes,
is a little tricky.
Alabama's a different animal. Alabama currently does not recognize reforestation expense or amortization. So your accountant needs to make sure they keep up with whatever you spend on reforestation, because the only time you get to take advantage of it is when you do have a sale. Then on the Alabama return, that's additional basis.
So you don't lose it.
You don't lose it. You just don't get the immediate benefit of it.
Okay. Well, that's good. It's a little bit of extra work, but
Yes.
At least you don't lose it. Okay. What else do people need to be thinking about if they, if they're planting, if they've got is there anything else they need to be thinking about from a management point of view?
Well, I'm not sure if this is exactly what you're asking, but some people's children could care less about the land.
That is important. Yeah.
And I actually had a client tell me he is going to set up his timberland in trust. He's going to seed a bank account with the money to actually for the upkeep of the land and timber, because he's afraid his children will just sell it when he and his wife are gone. And so he loves his land, and he wants to, I guess, put it in perpetuity.
Yeah.
Yeah.
So it'll stay in the family.
Yes.
We do see a lot of that. A lot of people wanting to keep their land in the family and pass it down. So if you had somebody ask you, okay, Orman, I've got this land, I'm getting older. Should I give it to my children now? Let them go ahead and be using it? Should I let them inherit it when I pass away? What would your recommendation be?
Okay. If you let them inherit it, they will get a step up in the basis. If they're a ne'er-do-well and they want to turn right around and sell it,
Yes.
2 days after mom and dad are gone, at least they won't have much of a tax consequence, if any, because it will actually be reported as in and out on their return, because you're selling it within a reasonable time of the date of death. So you got to step up in basis. So the IRS is going to say, well, if you sold it within 6-7 months, then that's really what your basis was, no matter what it was valued at.
So for people who are receiving the land, that's a big deal.
That is a big deal.
Because mom and dad or grandma and grandpa or whoever, they could have purchased that land 50 years ago.
Yes.
And obviously the basis would be a lot lower.
And we have run into that scenario where I had a client call me and say, my wife has some land that her mom gave her. And I'm like, okay,
Yeah.
what's your mother-in-law's basis? Well, I don't know.
Right.
She got it from her dad.
Oh, wow.
And I said, okay, well, what was his basis? Well,
Who
he
knows?
doesn't know, because he got it from his dad.
Oh, my
And
goodness.
so this went back like 5 or 6 generations.
Wow.
Yeah.
So at that point, there's just probably not a whole lot of basis
Right.
left.
Right.
Yeah. So that's a big deal for people when it comes to planning. And we see people who leave their land to multiple siblings who own it jointly. That works.
Yes.
It's a lot of times if there's a cut, they just split it 2, 3, 4 ways, however many owners there are, and report it individually. So there are different things you can do. At what point would you think, and this is just off the top of my head, but we see people that put it in a partnership,
Yes.
a family partnership, and I think people do that a lot of times. Sometimes they do it for liability protection,
Right.
but I think they do it sometimes just so they can easily have a plan. I mean, I've got a client it's several siblings, and they have this partnership and they own this land, and a lot of it has to do with the management. That way they can manage it, they can bring in other family members, and if someone passes away. So we see that sometimes too, where people want to put it in a partnership.
Right. And if it's in a partnership, hopefully you have an operating agreement,
Yes.
and hopefully one person is the managing partner.
Yes.
So that he or she can kind of control without having everybody else chirping, trying to get in on the management. It also comes in handy if you're going to have an estate issue when
Okay.
you die, because you can actually, well, first off, let's say I die and I've got a huge partnership. When it comes time to report it on my estate tax return, instead of having a full value, let's just say it was worth $10 million, okay? Instead of it being reported as $10 million on my estate return, resulting in $4 million worth of tax,
Right.
you can have the partnership valued.
Okay.
There'll be 2, 3, 4 partners in it. Okay. You can get a discount for lack of marketability.
Yeah.
Because knowing my family, who would want to be a partner with them? So you get that discount.
Right.
And then also, if I didn't own more than 50%, then I could get a minority discount.
Yes.
Yeah, that's what I'm trying to think of.
Yeah.
So my $10 million partnership could actually be reduced to $6.5 million. And while that's still a lot of money,
Sure.
it saves quite a bit of estate tax.
So that's a good estate planning strategy there
Yes.
for people. Okay. What else? I mean, we've covered a variety of topics. What have we not talked about yet that you have? Is there anything else on the?
While we're on the estate
Yeah.
subject, there's a rarely used code section. It's called 2032A. When I first got into this business, we would see a lot of people pass, and we weren't being derogatory, but it was like they were land rich but cash poor.
Right.
The only reason they even had a taxable estate was because they owned so much land, timber. Well, Code Section 2032A would actually let you reduce the value. It was called current use value.
Okay.
And so you could reduce the value of the land and timber. Right now it sits at like $1.3 million. You can reduce it.
Okay.
The good thing about it is it saves you tax money.
Sure.
The only bad part is if you sell it within 10 years of the date of death, you have to recapture the tax. Now, we actually had that happen.
Oh.
And I mean, they had already made it like 9 years.
Oh no.
So they
Whoops.
thought, well, we'll just sell the timber and, we'll owe a year's worth. No, the IRS made them go all the way back to the date of death. So anyway, it was penalty, interest, the whole gambit. So what we like to do now is bifurcate. I don't get to use that word much.
That's a big word.
But we
SAT word.
bifurcate the timberland into timber and land.
Okay.
Because I don't know a single timberland owner that wants to sell the land.
Right.
So we do the 2032A election on the land itself, leave the timber out of it. That way, if they want to cut the timber, they're not restricted.
Oh, that's a good strategy. Yep. Okay. So I think this highlights the importance of finding a CPA with timber expertise, because in different parts of the country, they're not talking about this,
Right.
but in certain parts of the country, and specifically Alabama where we are, it's a big deal. Timberland is a big deal. So just like if you were in another part of the country, there'd be something else that'd be a big deal there
Right.
that we don't see here. So I think that what you're describing highlights the importance of having a CPA, an attorney, a forester who does this frequently, who understands the ins and outs of timber tax, because it, just like a lot of things, it has its own special rules, its own special, like that little known rule. A lot of people might not realize that that's even an option.
Yeah. I had a CPA from Florida call me yesterday afternoon. He bought some timberland in Alabama. He said he knows nothing about timber taxation.
Mm-hmm.
And the forester who he was dealing with recommended me.
How about that?
So the Florida CPA called me just to talk timber tax.
Okay.
And the more I told him, I think the more confused he got. And he said, I may just get you to do my tax return
Yeah.
since I own the timberland now. And I said, just let me know.
Right.
So,
Yes. Yeah. It's because you've been doing this for a long time.
yes,
And it takes a while to get all that experience.
it does.
So that makes sense. I can see him saying, no, I'll just let you worry about that.
Yeah, Florida income tax is a little different.
That's true.
Than
That's
us.
true. Yeah,
Yeah.
that is true. Okay. I'm trying to think. What have we not covered? You've probably got some notes over there.
Let me see. Let me look at my notes and
Look
see.
at your notes. I know we talked about the appraisals and the basis. That was our big takeaway.
Yeah, I mean, I think we pretty much covered it. I know we mentioned like, if you have a barn, you build a barn, you can depreciate that. And of course, that will reduce the basis in the barn.
Right.
Trees, you deplete the trees. And so that reduces the basis in the trees for what you cut.
Right. Okay.
And then if you do have reforestation, then you amortize the reforestation amount.
So there's a decent amount of record keeping that goes into all this. Just like if you had any other kind of business, you need to keep track of all this. So possibly mileage. I mean,
Yes.
And roads. Sometimes people construct roads on their land, or
They have to put in culverts.
right.
And I've talked to clients before. They live 80 miles from where their timberland is.
Mm-hmm.
And they go over there a couple of times a week to check on it,
Sure.
to make sure it hadn't burned up, the pine beetles not destroying it.
That's right.
And I said, well, you need to keep up with your mileage.
Mm-hmm.
And they're like, it's just 80 miles. And I'm like, think about it.
Yeah.
That's 160 miles round trip. You're going twice a week, sometimes 3. That's going to add up, especially now since it's 62.5 cents a mile.
That's right. It's gone up.
They meet with their attorneys, their CPAs. They'll meet with their forester to discuss the management plan that we hope all of them have.
That's right.
I said, look, write down the date, who you met with, what you discussed, because that's also deductible
That's right.
on your Schedule F.
So people need to treat it. Sometimes you would think of it as an investment,
Right.
like you said earlier, maybe stocks and bonds. We think of it like that because, a lot of times people they're not selling their stocks and bonds either sometimes. They might hold certain things for a long time and collect the dividends. They might think of timber the same way, but it needs to be treated more like a business where
Right.
you are keeping track of those things.
Yes.
Because those things can be deductible. So that record keeping is important. The mileage log, the management plan.
And I can't emphasize enough how important it is to keep good records,
Yes.
because if you get audited, there's that word again.
We don't like that word.
We don't want you to tell the IRS auditor, okay, give me a couple of months and I'll get back with you.
Right.
No, you just need to say, I've got my records.
Yep.
Where do I need to send them?
And that's what they want to hear too.
Yes.
Yes. Well, I think this has been a really good discussion.
And I'm sure people may have other questions.
Sure.
They can contact us at JMF.
Mm-hmm.
We'll be happy to answer any questions. I even offer, when I do go speak to groups, if you've been with a CPA for 30 years, even if that CPA or accountant doesn't understand taxation,
Mm-hmm.
I don't want you to dump them
Sure.
just because you heard a good-looking young man talk to you about timber.
Right.
Have him or her call me.
Mm-hmm.
It may be something simple that they don't understand, but I could give them an answer. So
Yeah, that's good because it may be just a quick conversation could move somebody in the right direction.
yeah,
Well, good. Well, I have enjoyed this today. We've covered a lot of ground.
yes, we
Get it?
have. Oh, yes, no pun intended.
Well, thank you to everyone I'm sorry, did you have something else?
I did not.
Oh, okay. Thank you to everyone for tuning in today and to the JMF Advisors podcast. And we want to remind you to follow us on YouTube and the various audio platforms where you can get podcasts. And we hope you'll tune in next time.
If you would like us to help your business or would like to suggest additional podcast topics, simply send an email to info@jmf.com.
And don't forget to subscribe to our podcast on YouTube and your favorite audio podcast apps.